What's up, people? We gonna make it. 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 We gonna the theme song. You already know what time it is. Hey, what's up, people? It's your boy Trader Guy here on this Tuesday night. And we're gonna continue on this price action trading system I was teaching for the last couple of nights. As I told you guys before, I'm a technical trader, so I'm gonna stick to the. Even though I did a couple podcasts on the fundamental analysis, what have you, I'm strictly a technical trader. I don't do fundamentals at all. So I figured that I could teach technical better because I actually use the technicals. So that's why I said I'm gonna do the price action trading system, and it's gonna help us in our next coming lessons when we get into live trading in the forex market with our practice accounts. Some of the things you learn here, and I said this on every single podcast from technical analysis to price action system. This system can be used in any market, stocks, crypto, forex. It doesn't matter. Same as the stock. Same. It's just like I say, technical analysis can be used in any market, and that's what this price action trading system is. Not with technical analysis. All right. So on that note, we're gonna recap what we started at. Let's see. We first talked about support and resistance, and just a quick recap. The words are simple. When you support something, you holding it up. When you resist something, you pushing it back. So basically, when the price of a security reaches a certain point, a certain price point, if it doesn't drop below that price point, for example, let's say Samsung, my phone, their stock is $5. Every time the stock drops to $4.85, it bounces back up. That means that $4.85 is known as support. Likewise, if it's the Samsung stocks at $5, if it goes up to $5.05, but every time it reaches $5.05, it gets pushed back. It's resistance because the price is resistant. It's really easy, people. All right, so after we did the support resistance, we went to Japanese candlesticks. And the most important parts of a candlestick is four parts: the open, the close, the high, and the low. That's the four parts of the candlestick that you need to worry about. Anything else, it's uncivilized, as they say. Nah, though. Seriously though, for the candlestick, it's the open, the close, the high, the low. And as we went across, there's all type of candlestick patterns, but I just did like the basic, most common ones you're gonna see. And I cannot stress this enough, man. It's all about pattern recognition. You're going to see the same patterns over and over and over and over whenever you trade. So it would behoove you to learn the candlestick patterns, because that's honestly, learning how to read candlesticks is like half the battle. You can just stare at a chart without anything else. Just based off the candlesticks, you can see if it's trending, if it's ranging, or what have you. Which is a segue to tonight's lesson. We're going to get into if the security, whether stock or forex, a crypto, a bond. Like I say, these technical analysis can be used in any market. We're gonna get into whether it's a range or a trading environment. As I said on previous podcasts, a range environment. Well, let me bring up the screen share, people. Give me a minute. Like pretty much a range is what it is. It stays within a range. And the trending environment is trending. Like I always try to tell you guys, keep it simple when you trade. Don't try to sound super smart. All right, so all right, I'm sorry. This is from the book I wrote. This book is called Price Action Trading. And now let me emphasize this: price action trading is very common in the technical analysis field. So everyone's price action trading system is going to be somewhat alike because we're all using the same indicators. So I don't want no one to think I plagiarize enough. This is all my ideas, but as I say, when you price action trade, you're following the price. So these are the price points that you're going to use. That makes sense, All right, now let me go to the book. In a minute. Now, before you enter and trade, whether long or short, it's imperative that you determine whether the market is trending or range trading. Now, the biggest difference between a range trading and trending environment is that in a range market, there's a defined top and bottom. That's what it means, range, because it's trading within a range of a certain between certain points. This top and bottom point is trading within that range. Whereas a trending environment, there is no defined top or bottom. When it's a trend, it can go as high as it go or low as it go. It's either or, you know. But all right, so a common misconception that traders only make money in the bull market and you only lose money in the bear market. That's a complete fallacy. You're able to make profit in both directions, especially in forex, because there's so much liquidity. So it would behoove you to figure out what the market is. Now, as we said previously, trend line is really easy to spot, either going down or going up. You just look like a trend line up is just like a slanted line going up on a chart. Likewise, a trend down is like basically a slanted line going down. I mean, let's keep it simple, people. As I always say, keep it simple, stupid. Term for the military. All right. As I just in a range trading environment, there are clear tops and bottoms. So I'm gonna use that same example that we used from the matter of fact, I got a screenshot here. Right here. All right, so this is a stock price actually. So see the range is 770 and 790 are the support and resistance. So they're basically in between those two ranges. Like sorry. So yeah, so support and resistance and range trading are kind of like the same thing because when a security is stuck between a range, the top is the resistance, the bottom is the support. Me personally, support and range trading is like my favorite thing because it's so easy to get the tops and bottoms, entry exit points. Like I cannot stress this enough. Once you know about price action trading and how to spot the tops and bottoms, it becomes very easy. Or I'm sorry, it becomes easier than what it is. As I told you guys, these are candlesticks. Just me being a trader, I can just see just from the candlesticks. They would take everything off here. I would just focus on these candlesticks. And you can just see, it's like I told you guys, when you see these crosses, doji, that means that whatever trend is in is about to end. It's not 100%, but it's really good chance. See, if you notice, this was a downtrend. It's trending down. Doji, and what happened? It's uptrend. Doji, downtrend. See, like I said, with those hammers, those pin bars, once you start to spot them, that's why it would behoove anyone out there to Google Japanese candlesticks. Like me myself, I know, I don't know them all myself because, like I said on the previous podcast, it's like hundreds of them Japanese candlesticks, so many of them. But as you see on this chart, you see the same ones over. Like you really should learn about the doji, the hammer, and the pin bar and the shooting star. Those are the four examples I gave you guys 2 nights ago. Those are the four most common ones you see. Well, and I actually know those four because I feel like once you learn those four, you are able to spot when trends are about to start or when trends are ending because they are always found at the end of the trend. Back to what I was saying about the range and environment. As you see here, it goes up, it hit the resistance, it gets pushed back down. It hit the support, it gets pushed back up. Resistance, push it back. Support, push it back up. So that's stuck in the range. You see the range is 790 is the resistance, 770 is the support. Now, as I wrote up here, knowing how the price responds to these levels allows us to formulate a plan to take advantage of this. You could set a long order buy at 775 and put your take profit at 790. Or you could set a short order, sell at 785 and take profit at 770. That's why it's important to define the top and bottom parts of the range. Like, I can't emphasize that enough. Once you know what a range, it becomes so much more easier because all right, so if it hits this point, it's going back down. It hits that point, it's going back up. All right, so that right there is half the battle. Like what show was that? Knowing's half G.I. Joe. Knowing's half the battle, and I can't really emphasize that more, people. So if anyone out there watching, you want to learn range trading, the difference between the range and the trending environment. I'm about to get more into that, and also Google Japanese candlesticks. Anyone want to do a recap? Just send me an email, trader.life@gmail. Facebook me, inbox me. We can go over the candlesticks again. Because candlesticks, like I said, it's a lot of them. But once you learn I'm gonna say 6. All right, let me go list a couple more that I can teach you guys. But you want to learn doji, doji, doji. I can't emphasize that enough. Doji, hammer, the pin bar, and the shooting star. Once you see them, action's about to happen. Especially if you get a bunch of dojis together, whatever way that line was going, it's about to reverse. I can't emphasize that enough. Knowing pin bars, knowing the ranges, it's like easy money. It becomes so much more simpler. I think a lot of people think trading is hard because they never did it. I guess that's how it was before I tried it. But once I got into it, I mean, it's not simple, but it's not as hard as a lot of people think. It is really not that hard. All right, so now it's also a consistent point I try to hammer home is that it's utmost importance to know which type of environment you're in before you make a trade. All right, so let me use it. I'm sorry, I'm trying to find what I wrote. There we go. Now, in the trending environment, remember, there's no tops or bottoms. It just goes as far as it can go before the trend dies down. Now, in the trend, it's remember that whatever. See here, I'll put stocks. I'll use a stock as an example. It could be a currency pair, a bond, a crypto coin. It makes higher lows or lower highs. Whoa! I know I just gave you an aneurysm trying to decipher that. Let me explain further though. That means in the uptrend, the lowest price of the day gets higher and higher each successive day. Or if it's a bear market, the highest price of the day gets lower and lower. Those are common indicators that you're in a strong trend. When the smallest price of the period, whether it's a hourly chart, daily chart, yearly chart, weekly, whatever, when the smallest price gets consistently higher each successive, I, I, I use a day here, so I'll put successive days. It could be hour, week, whatever. But if you notice, it keeps getting higher. And what happened here? Doji, pin bar, doji, doji, and the trend ended. Them Japanese candlesticks, baby, those are like the cheat code. Also, in the bear market, the highest price of the day is lower and lower. That's when you know you're in a downtrend. When the high of the day, it gets lower and lower each day, each following day. Classic sign of a downtrend, as we see here. Downtrend. What we got? Pin bar, and a shooting star, and the trend's over. You know, or we can go right here. It was going down, down. We had a pin bar and the doji. It stopped, but it gapped. So it means I don't know what chart this is from, but something happened for it to gap so big. But and another indicator you guys want to check for to see if it's trending is the ADX indicator. Okay, it's called ADX, Average Directional Index. Now the ADX, it really doesn't. Sorry, I'm trying to find where I put it at. ADX. Let me get a screen share. Now the ADX indicator is really easy. Whatever trading software or trading platform you're on, you can just click on indicators and pick ADX. Now the ADX measures the strength of the trend. As I said before, it doesn't matter if the trend's going up or down. It doesn't measure the direction it's going. It measures the strength of it. So the key number in the ADX indicator is 25. If it's over 25, we're in a strong trend. If it's under 25, then we're in a range environment. As I already explained what the range is, the top and bottom, stuck between that range. So basically, people, one thing they teach you when you first learn to trade is the trend is your friend, or don't trade against the trend. That's how you lose money, trading against the trend. Like if you see the chart going up, but you want to go short, which is sell. You want to sell. Why would you go against the trend? It's like trying to uh, catch a falling knife, as someone once told me. That's what they equate that to, trying to catch a falling knife. That's painful. And believe me, people, losing money in the market is very painful. So it would behoove people to understand which environment that they're trading in, a range environment or a trending environment. And that's very important. And another indicator is the VIX, which is the volume indication index, which determines how much volume. Another thing in the trend, when the volume increases, that means more and more people are either buying or selling, going long, going short. And when more and more people are doing that, it makes the price really move. Again, price action trading is pretty simple. It's the PAT system. And I hate the Patriots, but I call it the Pats. That's what I call it, the Pats. Like, uh, you can Google right now price action trading. If anyone out there watching, or for my viewers that watch when it's over, you're gonna see all type of different price action trading systems, but they're all basically the same thing. So we all use the same technical indicators. So, like my price action trading system would be similar to some guy on Wall Street that's making millions, billions, but because we're using the same indicators, Japanese candlesticks, support and resistance, pivot points, which we're gonna go over in the next lesson, highs and lows. I mean, I can't. That's really simple. I can't. All right, I don't want to sell you guys a dream talking about it's really easy, but again, it is really easy. Just practice makes perfect, people. So that's why we're gonna start opening up these practice accounts for forex, so you guys can trade with fake money and learn how the market moves. Because I keep telling you guys, I could do this while I'm blue in the face. Until you actually get out there in the market and start making trades, and you're not gonna start seeing how the patterns form. Or you're not, you just won't, like, trying to learn from someone else is good. It's very good, but you're gonna have to get experience. So that's why I would say let's do all practice accounts where that's fake cash. You can do all kind of dumb stuff with the fake money, and you get to learn. You know what I mean? Or you can go to like a real account, but use many lots. When you use the small lots, like I went over in the forex podcast I did, the smaller lot sizes, you can put $200 in there. That's like 200,000 when you got those small lots, because it's measured in pennies. So you really want to take no big losses. You have to take a huge loss to lose $200 when the pips are measured in pennies. So that's what we're gonna do, people. So I got the last part. Matter of fact, we can do that now because it's only 8:21. I'll go to like 8:30, 8:35. I told you guys about chart analysis to do multiple time frames. All right. So multiple time frames, that's really self-explanatory. Because, all right, so when you trade, oh, I'm sorry, when I trade, it's how it was taught to me. I'm gonna try to teach you guys. It's always good to understand the bigger picture. The big picture is everything when you trade. So when you trade, you might want to start with the chart for the weekly chart or the daily chart. Because you want to know if the overall trend in the big picture, if it's trending up or down. You don't ever want to go against a trend in a long-term chart, because the longer the time frame, the more stronger the move's going to be, because it had more time to form. So it's always important to do multiple time frame analysis. Like, start, as I say, a chart from a weekly or the daily chart, and come down to the 4 hour, and then whatever chart you choose to trade on. Me, I use the hourly chart. Like, some people use the 10-minute, 15-minute. Like I say, it's so many time increments. It's up to you. But word of advice is always start with the bigger time frame first, so you can just get a clear view of the market. Because, like I say, you want to take a bird's eye view. Man, that's a good analogy. Matter of fact, I put that in my book. Actually, I did. I just stole it from myself. I got it from my book. Yeah, like, so when you use the bigger time frame, it's like you got a bird's eye view, because you can see the whole market. So you got the bird, a bird up, you can see everything. And when you come down to the time frame that you trade on, it's kind of like playing a first person shooter game, because you're like very stuck on just that time frame. You really don't see anything else. You just see what you can see, if that makes sense. So yeah, so you always want to check those multiple time frames. I can't say that enough. And another word we're going to get to is confluence. What is confluence, you ask? I'll tell you if you want to know. All right, so confluence that's the objective of any trading system. Actually, that's the objective of any trade that you make. Confluence is basically when you got all types of technical indicators meeting in the same area on the chart. Now, when you got confluence, that's like, man, confluence is easy money. Man, technical trading is like the greatest, because when you get confluence, it's like, wow. it's just easy money. So as I said in the book, it's the true objective of any price action trading system. Confluence is the point of juncture or meeting point for two or more technical indicators. When confluence occurs, the accuracy and profitability of a trade is greatly increased. Now, it's important to realize that confluence can occur in all investment markets, but it usually occurs in a market that got more liquidity because it's more price moving in those markets. So confluence happens in stocks, but it isn't as frequent as it happens in forex and commodities or futures because so much liquidity is going to be a bunch of price moving, and you're going to see a lot of indicators of confluence on those charts. So basically, people, the price action trading system, it has parts. They're like separate. It's like what's the word I'm looking for? Synergy, where all the parts are doing their own thing, but they're kind of moving the same way, if that makes sense. And they're all kind of interconnected. So that's the true objective of the price action trading system, is to achieve confluence. If anyone out there is watching, Google confluence stocks or confluence forwards or confluence investing, and you'll get a better definition. Maybe I'm not explaining it better, but basically it's just a place where things meet up at. Like the trying to think of a good confluence. City of St. Louis, where the Mississippi River and the Missouri River meet, that's a confluence. Or the city of Pittsburgh, the three rivers they meet. So on a chart, confluence would be the 20-day average, EMA average, the 14 EMA, and let's say the a line at support is all at a price point of, I'm gonna throw a random number, $5. So Samsung stock got close to $5. Now, if you look at the $5 price point, it's confluence there. So a smart trader would say, "Wow, there's a bunch of stuff happening at that price point. That means something's gonna happen at that price point." So that means it's I cannot emphasize this, people. It would behoove you to learn technical trading. I mean, fundamentals is good too. I'm not gonna knock fundamental, but me as a day trader and a forex trader, technicals is my whole life. And technicals about pattern recognition. Like you can just put me in front of any chart, and I can just, because I trade, I know candlesticks. I can just tell. Wow, I mean, with then I'm telling people, Japanese candlesticks are like the best. So you should Google those too. I'm gonna say that till I'm blue in the face. Japanese candlesticks. Japanese candlesticks. They are the best. Now, like I keep saying, see the ones that I chose them from my experience. Maybe if you trade, you'll find some that fits for you. But like I say, the doji, Doji. You want to learn the doji. That's the cross on the chart. Like any chart you see, any if you Google any security, any stock, forex, crypto, whatever, if you Google that chart and the candlestick chart, I'm guaranteed whenever you see that cross on that chart, doji, that means wherever that cross, wherever it's at, if it's an uptrend or a downtrend, it's about to end. So that right there, just me by being a technical trader, so let's buy the doji. Like say, all right, if it's a downtrend, let's buy the doji and the hammer. I'm about to buy. I don't see nothing else. I'm gonna buy it because they always say a reversal. It doesn't matter. The doji, the pin bar, the hammer, the shooting star, it's a signify reversal. And it's like that is like easy money for people. And then I remember when I first learned to trade, I learned candlesticks first, what have you. So I would pretend like I was a really good trader just off the candlesticks, and people were like, "Wow, how'd you know that?" I'm like, I'm just good like that." But actually, it was those candlesticks, man. Those candlesticks are very strong. Then you start adding on, like, so you start with your candlesticks, then you move to your support and resistance, then you get to the moving averages. Again, these are all separate things, but they all kind of tell the same picture. No, then you figure out if it's trending or if it's a range environment. See, that, people, is the system, the price action system. What you're doing is following the price on the chart. You're not worried about nothing else. You're just looking at that chart. And that is the hallmark of a technical trader. Can't really emphasize that enough. You know, anyone out there watching, listening, or any viewers that watch this after I end the live, technical trading, pattern recognition. Used to just I just can't stress it enough, man. Like I say, trading's not hard, man. It's practice makes perfect. And if you never trade it, it's gonna be hard because you never did it. But if you do it like I do it now, I'm not gonna say I'm the best in the world. Obviously, I'm not. I'll be have my own like it'll be on the news trader. I'm just starting my company, but I've been trading for a while, and I just like to tell people you want to learn Japanese candlesticks. I can't say that no more. You want to learn Japanese candlesticks. So many people inbox me and say I want to learn trading. Okay, start with the candlesticks. I guarantee you just learn basic candlesticks today for like a week. Just study your candlesticks, and then the very next week start reading charts. I guarantee you're gonna start noticing things on the charts just from your candlesticks. Because you're gonna see the same candlesticks. That's why I chose those ones I chose because you see the same ones. So yeah, just candlesticks, moving averages, the pivot points, which I'm gonna do tomorrow, support and resistance, and the multiple time frame analysis. And that's the PAT system, baby. Price action trading. That's the hallmark of a technical trader. You just stick on the chart. And I kept mine simple. Like I say, keep it simple, stupid. I try to keep it real simple because one thing I learned when I first started trading, if you put too much stuff on the chart, you're gonna get confused because you're going to get conflicting signals. Some I'm going to say buy, some going to say sell, some's going to say it's just going to be confusing. So you're going to have to go through and figure out which ones fit your trading style. That's why I keep saying, people, you're going to have to trade eventually to learn how to trade. You just can't watch videos and read books. You're going to have to get in that arena. That's why we're going to start practice trading, people. Now, I chose Forex again because Forex is open during these hours. There's no stocks to trade. The stock market is closed. But if people are interested, I don't know if anyone's going to be on the lives in the morning time. I could start doing lives because the stock market open at 9:30. I like to do my pre-picks around like 8, 9. I can show you how I set up my chart, set up my profit, set up my day trading charts, and we can start doing live trades in the stock market. People, there's things like Wall Street. I think it's Wall Street stock. I forget the name of the actual company, but you can get a practice stock market account too, and you can practice with fake money in the stocks. And that's a good way to go, people. Instead of practicing with real money, you can practice with fake money. Do as much trades as you want, lose as much money as you want. So again, and once people start to trade, you're going to realize certain things work in certain markets and not in other markets. Technical analysis does work in all markets, as I said before, but it works better in markets with more liquidity. Like it works in stocks perfectly good, but stocks is kind of slow. That's why I started this thing off with stocks for all beginners, because stocks is the first thing that people get into when they invest. Except for me, because I'm retarded. I got the Forex first, came to stocks. Ooh. But yeah, but most people though, stocks is slow. It's slower pace, and it's really easy to learn because it's not as much moving. So when you get to the Forex, that's like going from triple A to the major leagues. It's the same batting stance, the same pitches, but they become a lot faster. Everything's just bigger, better, and faster. So that's why it's good to practice, people. That's what we're going to practice, all right? So keep it in mind. The PAT system, price action trading. Japanese candlesticks is the first part. Support and resistance, the second part. Pivot points, we didn't go over. We're going to go over that tomorrow. And what was the multiple chart frame and multiple time frame analysis. And once you achieve those, learn those, people, you pretty much are a technical trader. You don't really have to learn too much more. I cannot emphasize that enough, man. Pattern recognition, pattern recognition, pattern recognition. I'm gonna beat that in you guys' head. Once you just trade, you're gonna just start staring at. Okay, I see that. Oh, it's about to. Okay, you're gonna just start noticing it. Again, people, pattern recognition. Again, pin bar, shooting star, hammer, and the doji. Once you spot them, it becomes a lot easier to trade actually. And that's why I did the price action trading. Like again, if you want to read the book, just email me because the website is not done yet. We got a couple more, like a week. I'm doing it all myself, people. But yeah, so if you want a copy of this book where I get more in depth, and believe me, I write really simple. I kind of write how I talk. Now I do that so it would be simple for you to learn it. I don't want to, because all right. So when I first started to trade, I would buy those books and I would be like, wow, this shit say it's supposed to be for beginners, but I still don't know what the hell he's saying. It's over my head still. So I try to make it point blank simple. That's one thing about me. I try to keep it simple, stupid. So again, anybody that want a copy of the book, just email me at trader.life@gmail. I'll throw you the price action system. It's for free, right? Nothing's for charge. I'm not getting paid for this at all. All right, so don't think I'm promoting a paid book. It's not really a book, people. It's more of a pamphlet because it's only 15 pages. It's just my little trading system. I could have got way more in depth and made it all 200 pages, but for what? It's gonna say the same thing if it's 15 pages or 200 pages. It's the 200-page book gonna have way more fluff to confuse you people. I kept mine bare bones. I got right in the mix with it. You know, like, and again, this is a free book, so you're not paying nothing. You're not paying shipping or handling. You're just paying attention. That's what you got to pay attention. You know, so I guess it does cost. Ain't nothing free. But yeah, people. On that note, just remember, man, price action trading. You want to do technical analysis. You want to Japanese candlesticks. I'm gonna say that until you guys get tired of hearing me say it. Japanese candlesticks. Doji, pin bar, hammer, shooting star. Those are the most important. There's way more candlesticks. You got the on the top of my head, I don't really know off the top of the heads. I stick to those 4 or 5, you know. Um yeah, man, that pat system is vicious, people. Once you learn that, I really think that a lot of people would see trading isn't that hard. Because remember, we gonna make it. We gonna make it. On that note, people, Tuesday night, your boy Trader Guy signing off. Tomorrow is Wednesday. I don't know what we're gonna do yet. If I get my guest, we're gonna go somewhere else. If I don't get my guest, we're gonna finish off this pat system. I'm gonna teach you guys the pivot points. And pivot points are very easy to make. They're really basic. They're really simple. Like so much of this stuff sounds hard because you ain't never do it. But once you know, that's all they do. What the hell? That's what I've been scared to do for so long. That's how I felt when I finally learned how to trade. This is what I was worried about doing. This is what I thought that you need a PhD in economics and finance to do. With me, I can do this. But shit, let's get it. And that's how you guys are gonna be when y'all see how easy it is, man. Honestly, or I don't want to say easy. It just isn't as hard as you think it's gonna be. That's more of a better way to say. Cause even now, I've been trading for 13 years. I lose money and shit. I done lost. Man, the last trade I made like a couple of days ago. I got caught up. I got caught up in the short squeeze, and we're gonna talk about these investment terms in the coming weeks. And short squeezes are vicious. If you know what the short squeeze is, Google what is a short squeeze, and that's when they squeeze all the shorts out the market. They just squeeze me out. So yeah, man. So I don't want to sell you a dream like you're never gonna lose money. The thing with trading is to maximize your winnings and minimize your losses, and that's basically what trading is all about. Cut your losses short, but allow your winners to run. And again, as I say, pattern recognition, pattern recognition, pattern recognition. Japanese candlesticks. It will behoove anyone out there to learn some Japanese candlesticks. I I'm willing to guarantee this. If you study them candlesticks like you study, I don't know, study for a test or study like raps like me. I love rap music, so I got so many songs memorized in my big head. So I try to take that to my candlesticks, how to memorize some candlesticks like I memorize rap songs. That's why now you can put any chart in front of me and I can just spot it right then and there. Oh, there go a candle, there go a pin bar, there go a hammer, there go a doji. Depends about the end. Sell, buy. Now, so as I said before, I'm kind of rambling on, but I'm on to something here, people. So just hang on. I said before, trading is 50-50, man. It's either buy or sell. So it's at the end of the day, you have a 50% chance of being right. If you was to blindfold yourself and press a button, you have a 50% chance of being right. So let's not make it harder than what it is. Now, once you start learning how to read the chart with the candlesticks, how to learn how to trade off the moving averages, things like that, those 50% odds jump up to 60, jump up to 70, jump up to 80. And that's basically what it is. You only trade when you got good odds in your favor, because like again, it's only two options, so it's a 50% chance. I just wish people would realize how hard is not. It isn't as hard as they think it is. It's like learning how to type. Before you first learned how to type, it was hard because you didn't know how to do it. But once you know how to type, I'm hitting about 85 words a minute when I type. All right, let me stop lying for the camera. about 45, but I go fast with it, so it look like I'm going 80 miles, like 80 words a minute, because my fingers be humming when I type. Yeah. On that note, people, remember we gonna make it, and I'll see you guys tomorrow night. Like I said, I don't know what my guest is gonna do or not, so we're either gonna do some business stuff, or we're gonna continue on this pack system. And I'm gonna finish it off with the pivot points. And then after that, we're gonna open up our accounts. We gonna make it. Remember that, people. Man, yeah, I'm feeling good tonight. Tuesday night. And on that note, before Trader Die, I'm about to call it a night. Remember though, Japanese candlesticks. Japanese candlesticks. Pattern recognition. Pattern recognition. I'm gonna beat it in you guys' head. That's all trading is about. Learning how to recognize patterns so you can know how to trade off of them. Now, other than that, no people, you guys have a good night. Cool.